Digital marketing seems to be the mystery that most entrepreneurs struggle with, and real estate investors are no exception. The truth is, there are multiple avenues to success. Those experiences will be best shared by the guests on this podcast. My name is Jason Wright, and I would like to welcome you to Real Estate Investor Marketing Stories. Hey, what's happening? Jason Wright here. Welcome to episode number 37 of the podcast. And as always, I've got a great guest with me this week. I will share some info about that guest in a moment. All right, so I know that I've heard a lot of people say getting started, raising capital is very tough. It's overwhelming. A lot of people are done before they ever start. Like anything new, a lot of it's in your head. So I think, like most things in business, people have an experience kind of mapped out in their mind on how they think things are going to go. And then if things don't go that way, they might say things to themselves like, maybe this isn't for me, or I'm not good enough, or I'm not ready, or whatever. So I'm bringing this up to you today because recently I've attempted to start raising for my first syndication. So remember, I'm a digital marketer first, capital raiser second. And I'm reminded how tough it is to start anything new. So trying to raise for a short-term rental fund, trying to raise for syndication. And you'll get people who have the money to invest if they want to. And, they'll ask questions and maybe an aspect or two of the deal or the timing's not right. But something I've been doing, and I think a lot of people maybe forget about, is if you're talking to somebody who knows qualified, right? In my case, accredited, and even though this deal may not be the right deal for them, the timing may not be right, don't forget to say, hey, do you want to hear about my future deals? And if they say yes, then you can add them to your email list. So I think a lot of people forget that simple step of saying, okay, maybe this person is, qualified and a willing participant, just the timing's not right, and they forget about it. So my point in all that is telling you this. Direct response marketing, whether it's for a deal or for whatever else, is great, but not everybody's going to convert on the first conversation or the second or the 10th. So getting them into your email list, getting them into your world is a great idea, even for raising money. Okay. So yeah, I'm getting my butt kicked up one side and down the other, but I'm not giving up. I'm growing that list and learning, and eventually I'll have success. All right, enough about me and my sad start to capital raising. Today's guest, his name is Tudor Francu. Let me tell you what I know about Tudor. Great guy. He's an anesthesiologist and obviously an investor as well. His company for real estate investing is called Stellar Multifamily. He's been investing for 15 plus years. He's personally managed over 30 single-family homes and several small multifamily properties. He's passively invested in over 5,000 units in Texas. And finally, he's GP in several 100-plus unit deals. So this will be a great show. I think you'll really enjoy it. Let's check it out now. Hey, Tudor, welcome to the show, man. Thanks for coming on.
Hey, Jason. Thanks for having me. It's always a pleasure to have a conversation.
Absolutely. So I don't think I know this story about you. Tell me how you got started down the road with real estate investing.
Yeah, it's an interesting journey. I started probably over 20 years ago. Initially, it came up incidentally joining a meeting that Robert Kiyosaki had in Virginia, at that time. And it was one of those small things that he put together with his wife. And I went there and listened to him and listened to this new concept and new point of view he had about investing and about, what's an asset, what's a liability. I was fresh out of the residency in anesthesia and took a job close to Washington, D.C., and I wanted to see how we can, manage our investments and, start over in real estate. And I came home. I got an autograph from him, on the book. It just came out. The book came out, The Rich Dad, Poor Dad. Play a little bit of a cash flow game. Got a hang of the concepts that he was teaching, and just started taking action, basically, bought the first investment property in Baltimore. It was a 1-bedroom, 1-bath type of thing, and work on it myself and try to fix things and rent it out. And, with a little bit of cash flow I had a month, just roll it over. I was happy to start somewhere.
Mm-hmm.
And then, I don't know, I just keep repeating this and got up to about 30 properties portfolio over the years, and tried to manage them by myself and with a lot of headaches in single family homes that you can imagine. But it was a great experience. And, this whole thing came up to a point that I couldn't manage it anymore. It became too big and for one person to do this whole thing. And then I started looking at other options, getting older, not necessarily having that much time to do this anymore. So I was thinking, how can I scale up this business to a different level, right? And looking into multifamily, I found a mentorship group. I joined and learned the basics of that with all my knowledge that I had from single family investments, and started off on multifamily side. Basically, sold all the properties that I had at that time and moved the capital into multifamily. Started as a passive investor initially, and then got to the active general partnership role. And I don't know, from here, sky is the limit. I don't know.
I like it. So, do you still do anything with single family now?
Yeah, I have a couple of Airbnbs that I manage, short-term rentals, but it's nothing major. It's just more of a fun thing to do.
Yeah. So you and I were just talking about that briefly before the show. So how has your experience been with Airbnbs, kind of managing your own there?
Yeah, it's an interesting concept with Airbnb. It's similar to single-family home long-term rentals.
Yep.
With the advantage of having I would say a furnished house already that can bring you some more income a month. And it's something that can be very well scalable at the bigger level if you want to. So I'm considering actually doing a lot more on that side.
Yep. I like it.
Because I miss it.
Yeah, it's, for me, it's like my son is looking at options to graduate when he graduates high school here in May of next year. And he's listened enough to what I've said that he's like, I don't want to take on debt from my student loans. Like, I don't want to do it. So there's some other options. There's some free programs the state of Georgia offers with like getting a trade. And he's like, hey, I can get a trade. And while I'm doing that and learning that for free, I can start saving my money, give myself options for other things. And one thing I really want to show him by doing it is, hey, this is how you can buy a property 10% down as a vacation property. And then as long as you have the intent to stay there 15 days a year, you can rent it out when you're not there. I want to show him that process in our backyard. And since we live on the coast, using a tool like AirDNA, it tells me the markets that are good, and it's data-driven, not emotional. So when I get my wife involved with this, she goes emotional. It's like, I want that. And I'm like, but the market says, the data says it's a terrible investment. So kind of teaching the family all of this and giving us something to play with is what's drawing me to it for sure. So
yeah, that's a good point, especially for young people, and our kids in general. I have 2 daughters, and I told them from the beginning, I said, whenever you gotta, they rent apartments right now. They're young.
Well,
and I said, whenever you're ready to buy your own home, just think about the option of getting, this whole so-called a house hack, right? You buy a duplex or a fourplex, and you stay in one apartment and you rent the other 2 or 3 or whatever.
Yep.
So the concept is the same, right? It's like a little, it's like a little Monopoly game.
Absolutely. I love it, man. I love it. It's fun stuff. All right. So as of right now, what asset classes or markets do you focus on and why?
Yeah. So currently I'm only focusing on multifamily. That's my primary focus right now, and that's what I spend most of the time in.
Yeah.
I have several properties all across Texas that I'm a general partner in. I also have several investments as a passive investor with other groups. But yeah, on my end, I think I want to go with proven markets
Yep.
that are stable and have a lot of economic trends to back them up.
Yeah.
And Texas is one of them. Some people say right now, oh my God, Texas is so crowded. There's no way you can get a good deal in Texas anymore. There are a bunch of properties that are going to go up on sale, and people don't know what they're doing, and all this stuff. I mean, there are always going to be bad apples, right? Everywhere you go.
Yep.
But in general, the economic trends, it's towards that area that that can support any kind of investment. And some of them might not cash flow right away, because of different parameters that are not aligned, so to speak, now with the interest rates.
Yep.
But I'm very confident in the asset class itself as a principle that people are going to need a roof above their heads, and especially when they move in the bigger job markets like Texas is.
Yep.
It's not gonna. There's no way we can make things happen to have that many units available for that many people that are moving in right now.
Yep. I agree. And sounds like what you're saying is you're also using data to make good decisions with investing.
Yes.
I'll talk to people, with the digital marketing stuff. I'll talk to new people every week. And once in a while, I'll hear somebody with a focus on a market that no one has ever said before. And I'm like, tell me why that one? Because I've never heard that before. And their reasons are purely emotional, because you can hear, that's where my dad's from or whatever. And it's like,
Mm-hmm.
that's cool, but it might not necessarily make it a good investment. So I agree. Multifamily is a safe bet. The one deal I'm in on passively now is multifamily as well. So I'm in Chattanooga. It's going well. I think Texas does have a bunch of great markets, and I think it probably always will. So
Yeah.
wrong there at all.
Yeah, absolutely. And, I think in general, people are trying to cover areas in the South that, they're proven to be more, I would say, landlord friendly, lower tax brackets, a lot of job offerings. There's a high demand for workers. There's no way, those markets can just tank overnight. I mean, it's not very statistically possible. So that's why I think a lot of people are investing in those markets right now. And as we can see, over the past 4 or 5 years after the pandemic, in general, after the pandemic, people are moving from the States on the coast towards those areas in the center of the United States and, the South Belt, in principle, that have a lot of job demands there.
Yep, absolutely. Let me ask you this. So as you've gotten investors to work with you, what marketing strategies have initially got you some traction with attracting investors into what you're doing? What's working for you?
Yeah, that's a great question. I would think, so from historically speaking, when I started over in this field, it was just a very personal conversation with almost each one of them.
Yeah.
Because you don't want to sound like a salesperson, and we all sell something in this life, right? Well, it's ourselves or our brand or our product or our service, anything, right? But it's always a matter of trust between people to make you make like you right? To like you first, and then to trust you, and then to invest with you, or give you money, or whatever it is, or buy your product or your service. So that first conversation, I think, is very important, not only from the compliance point of view, but this is a personal people business. It's not a money issue here. The money is not the issue. The people are very important, and the relationships you create with those investors. And that's why, for me personally, it's very important, even if I spend more time, to create that kind of relationship and trust with someone that can possibly invest with me. I don't even know that at that point.
Yep.
The other thing that I'm looking for is the way I communicate with them. And I'm trying to put myself at a higher standard than anybody else, trying to be in their shoes, and see how. That's why I invested as a passive investor first.
Yep.
I want to see how those people are communicating with their investors, first of all, and learn from them. And I learned a lot. I learned good things, I learned bad things, not to do. So, I took that experience and incorporated it in my style and say, okay, this is how I want to be as a general partner with my investors. That's how the newsletter should look to them. That's how my emails should, give the information that they need and the frequency that they needed. Because honestly, we all know some people invest because of that person. It's not because of the deal.
Yeah. Yep.
So I don't want to market necessarily my deal in a way that can overcome my personal brand, my personal trust. Because at the end, if the deal goes south, people are coming to me. They're not going to the property management company. I'm the one who brought them into the deal. So I'm the principal in that role. So this is why it's a very, very personal touch that you have in this field. And I want to keep that going. And that's why I build up a little platform on my website to kind of educate people, to keep them communicating, keep communicating with them, and keep them up to date with all that's happening on my side.
Yep, I like it, and I think it's great advice to be a passive investor before you try to get your own investors, because it's an awkward conversation if somebody's like, "Hey, have you invested before?" And you have to say no. It just ends like kind of a weird message, So it's like, what is this person doing? Is this all about the money for them or what? So I think it's 100% a relationship-based business. It's really nice when you can say, I have at least walked in some of the shoes that you're going to walk through potentially as well. And I've noticed, like, when you get in these smaller groups, these more intimate settings, and you simply network with people and connect with them and tell them what you're doing, you don't even have to say if you want to invest. If people want in, they're going to come to you and say, how do I get involved? And that's where this ends, and you just can be yourself, and you're going to attract the people that like you and repel the people that don't. It's a comfortable way to do it and a great way to think about it. And I'd say the biggest mistake I see in marketing is people obsess about the deal. The IRR, like, nobody cares. I want to figure out, who are you? Do you believe in it? Have you invested in it? Where are you coming from? So
exactly, Jason. And it's very important to people to realize that these are projections.
Yes.
These are probabilities that we're putting up front. And most of us are very conservative in those projections and are trying to give the lower end of the spectrum, right, when you project a deal. But they're still projections. They depend on 4 or 5 years from now of what's going to happen with the market, with interest rates, with what the Fed is doing. There's so many other little things that come into play that you don't have control about.
Yeah.
And this is the first thing you need to learn and teach your investors, that this is a risk. No matter how you take it, it's a risk. It's an investment like any other investments. You can lose your money, you can double your money, you can triple your money. Yeah. We don't know now. Yeah. So it's a matter of how good you're able to communicate with those people and let them know what's happening, a good team can make a bad deal look awesome.
Yep.
And the other way around.
No.
You take over in a great deal, and with a bad team, you put it in the ground.
Absolutely.
So it's all about management people, the team that is running the deal, and how good they understand to be and transparent and honest with their investors. Things don't go well, sometime. It's the nature of life, right? And we can predict that too much. But when that happens, if you're upfront and say, hey, listen, we have this issue right now. The interest rates are higher than we expected. We have this cap rate that we need to buy. We need a little more cash, and we need to do a capital call. There are many people that did that. As long as you communicate with them and let them know, hey, we're in a team here. We get through this together. We might not get the projections we had from the start, but we still can save this deal from going south.
Yep.
Other than just go out and say, hey, by the way, you or as an investor, you need to give me another $50,000 because we got to lose the deal. Yeah. It's the way you talk to people, right? It's the way you communicate with them.
Yep, I agree. Very well said. So I'm going to mix it up a little bit here for you. I'm going to throw you a curveball. What has been the biggest mistake or the biggest regret you've had so far with your marketing around real estate investing?
With marketing? Yes. So in terms of mistakes, I think I did a mistake once with one of the deals that I put out for my investors, and I didn't have enough time to personally reach out to each one of them, and I just sent a blast email. It was in the beginning of my multifamily career, and when I looked back and I looked at the trends that on that email, whatever it was, I don't know, very few people open it. It went to spam most of the time. People didn't even know I sent an email. Yep. So relying on this technology, especially I'm not a tech person, relying on the technology too much to spread your message, it's a mistake.
Yep.
And I want to advise everyone that if you have an email platform or you have a CRM system and you say, okay, I'm just going to send an email or I'm just going to send an automated text message and expect that person to get back to you, you're making a mistake. I get hundreds of emails a day from other people with their deals. Like I don't respond to, I don't open them. I don't respond to them. The only way that I could reach out to people like this is to pick up the phone call and talk to them, or send a personal text message and say, hey, wait, when can we talk? Yeah. Are you interested in this? I can give you more information if you are. If not, most of the people are not in that frame of mind when you put out a deal, or they have issues in their families, or you don't know that. All you can do is to offer. And I always think about this as an investment offering. I'm not selling anything. I don't want you to be in my deal. I'm giving you an opportunity to put your money to grow. That's all I do.
Yeah. I like it. Makes a lot of sense. All right. Since we're throwing curveballs, I'll throw one more at you. Can you share a story about your journey? And this can go into the single family days that you've never shared publicly before. So it can be about anything you want. I'll tell you, most guests, when I ask them this, will give us something humorous. Sometimes it's a life lesson. Other times it's just a crazy scenario. But whatever comes to mind, we'd love to learn more about you.
Interesting. Yeah. Well, I have two stories on top of my head right now. One is on one of my multifamily deals. And people don't like talk about their failures, right? Because they're embarrassed or they don't want people to know about them. But I think it's very important to be honest with people and say, hey, listen, one of my deals didn't close, man. Okay, I couldn't close it. It was not necessarily my fault. But I want to talk about this, and maybe people can learn about this, one of my failures. It was a deal that we had in Alabama, in a great place, great deal, a wonderful complex to buy. We raised all the money. We had a great team on the ground to run this deal. And 2 weeks before, we got a loan, a Fannie loan at that time, fixed rate loan, was pretty rare in those days. And 2 weeks before closing, the property management company, without our knowledge, without the buyer's knowledge, forwarded the loan officers the last T3 financials without telling us. And they took all the expenses for the year in the last 1 or 2 months. And the loan officer looked at those financials. His eyes, were like, what is happening here? Why we're having this much of a loss? And cut our proceeds with, I think was close to $2 million. 2 weeks before closing. It was a panic mode, basically. We either have to come up with $2 million on the spot or ask sellers for a reduction in the price or some kind of, crazy solution.
Yep.
And we couldn't find anything that came close to this. And it was one of those things that you say, okay, can I go ahead with this or not? And we decided as a team to pull the plug right away. We returned all the investors' money back. Everybody was very happy from that point of view, and we had a retention of close to 80% of those investors coming into the next deal just because of that. We explained the situation and we said, listen, it's better now than later. And we lost some money personally, the GP team in this thing, but we saved the investors' money basically. Yep. with this approach. So, I would say it's more of a personal, I consider more of a personal failure that I learned from. And I learned not to rely on other people too much, trust, but verify. And so whenever you go into a deal like this, make sure as a GP team, you have your ducks in a row, like including your loan team, your property management team, and all those people that you think they're working for you and they're paid by you. So you need to pay very, very much attention to all these details before you close.
Yep, I like it. The good thing about what you just did is it creates so much authenticity. People watching this podcast and listening to this, they're going to go, man, this guy is the real deal. I love talking about failures because so many people don't. We know that everybody has them, so it's only going to be a benefit if you publicly share those. So,
absolutely.
I tell people entrepreneurship is a game of you've got to like being punched in the face because it's going to happen over and over and over, especially if you do it long enough. So,
yeah, you don't grow if you don't fail.
Yep, absolutely, absolutely. I like that. All right, what is one piece of marketing advice you would give another new capital raiser that wants to get into the game? What would you say?
I would say, look, before asking people to give you any money for any deal, no matter how good it is, and no matter how much do you want from them, think about how can you add value to those people and how can you help those people in their journey. Either it's education about this topic, or is a meeting that you bring a guest speaker. Either you have some kind of newsletter with all kinds of information that you want to send them before they make a decision. You need to teach them fundamentals of this type of investing first, because most people heard about it. They might know a friend or a family member they invested in multifamily, but they don't have the first-hand experience. And you have to give them that benefit of the doubt and say, hey, these are the benefits, these are the risks of this thing. So make sure you add value to your investors first before you go there and say, do you want to invest in my deal?
Absolutely.
Don't do this.
Yeah.
Because people are going to be turned off. They don't know what they're doing. They're scared. And unless they know you very well, they don't want to deal with this. They want to, they want somebody who can trust. They can trust. They can go back and say, hey, what about this? What about that? How do I do this? How do I do that? What's happening with this number? What do you do with the occupancy? How is the loan? There's so many questions people ask, and you have to be there for them. There's no greater responsibility for a general partner than their limited partner's money.
Yep, I agree. I like it.
The second one is, the first, it's 1A and 1B. The 1A is your investors. The 1B is your tenants.
Yeah, absolutely. No, I think it's great advice, and I think so many people are attracted to the idea of raising capital because for some reason, I don't know who's lying to them, but they think it's like a great get rich quick opportunity, and it's really not. You got to be raising a lot of money to make some serious income from that. Just raising capital. So
yeah, this is not a Ponzi scheme. This is not a get rich quick type of things. It's a long-term investment. It's a secure investment. There's backed by real property. Yes, the returns might not be that high as in the stock market overnight, but there's so many other advantages of getting into multifamily and owning an asset like this. Depreciation, bonus depreciation, all kinds of tax advantages.
Yep.
And it, at the end, you need to educate people to understand how good of a investment is long-term for them.
Yep. I love it. It's nice getting those K1s at the end of the year, isn't it?
Yes. I agree.
I'm going to give you those. So, all right.
That's true.
We're recording this in November 2023. As you look forward to just like the end of this year, what are you most focused on in your business? What are you trying to finish a year strong doing?
Yes. I have a lot of goals. I have a lot of hobbies, but in my main multifamily business, I think I'm trying to get my year finished with a great outcome for this year interest rates increase. And we're focusing as a GP teams on those deals that I own in maintaining stability for now. We're not trying to make, a ton of money. In general, all the NOIs are very good on the properties. We're not making distributions on a few of them just because we want to keep the cash to see what happens with this crazy Fed's logic that's going on out there in terms of interest rates. And then, obviously it's their investor money anyway. So at some point they're going to be distributed to them in a form or another. But for now, I think my goal is to stabilize and keep them very stable throughout the year until the end of this hurricane, so to speak, financial hurricane.
Yeah, I get it. It's great. Your people who've invested with you are lucky because you get it and your heart and your mind's in the right place, and not everybody's that way. So if anybody watching or listening would love to learn more from you, see what you're into, how can they best do so?
I think it's pretty easy to get in touch with me. I have a website that's very open to, a lot of investors. It's on www.stellarmultifamily.com. It's one word. I'm, on social media. I'm on Instagram, on Facebook, under Stellar Multifamily. So, please feel free to get in touch with me. I can help whatever I can.
Awesome, man. Well, thank you very much for coming on today. I enjoyed it. I hope you did as well.
Thank you, Jason. I hope your audience will benefit from this. Thank you.
Will. Take care. Thank you for listening to this episode of the show. I had a great time making it, and I hope you really enjoyed yourself listening to it. If you want to keep up with all things Real Estate Investor Marketing Stories podcast related, I encourage you strongly to go to reimarketingstories.com and signing up for our podcast newsletter. We will simply keep you up to date with what's going on with the show, new episodes, and things like that. reimarketingstories.com. So hopefully today's episode and the other episodes that you'll listen to will remind you that as a real estate investor, everybody starts at the beginning, okay? Our guest today and the other guests that you will hear on this show will share their real story, right? They'll tell you what worked, what didn't work. And I want you to remember one thing, if you remember nothing else today. It's possible for you too, okay? Never stop going and keep following your passion. Finally, today's show has been brought to you by capitalraisingautomations.com. If you're an active capital raiser and you are ready to learn the 3 areas that are holding you back from raising more capital, I strongly suggest you check out capitalraisingautomations.com. Check out our free 10-minute video there, and you let me know if it doesn't provide you value. I'm sure it will. All right, thanks again for listening to the show this week. Hope to see you next time. Take care.